recording. You have to accept that, and then I'll try to post those up in the next day or so and be a little better than I was last term at getting those up there for you in case you want to review things at a later time. Okay. All right, good. So let me go ahead and put up tonight's chapter. Okay. And I tried the trick of rebooting my machine just before class here to see if that takes away the annoying process where I have to put it in the tablet, it doesn't work, I have to reboot, and then it does work. Let's see if they here in the last 5 minutes or something takes away that sort of annoying process that we have to go through, it seems, every time. And it made no difference. I don't know what the formula is so that it doesn't do that, but it seems to like to do that. So, as they say in that movie, I'll be back after I reboot my machine. Some strange, funny reason, I'm gonna have to reboot it and then come back. So, I'll be back in a minute. Okay, gonna try it again. The tablet mode to tell you. Okay, I did the same exact thing just before class had started. Exactly what I just did. I did it just before a class started and it wouldn't write. And now that I rebooted after class started, so maybe they just want me to watch, let you watch me do go through that process. That's the only outcome I can think that Microsoft or whoever's doing this to us is trying to accomplish. Okay. All right, good. So let's go ahead. And let's start to take a look at what is contained in Chapter 3, okay? Now, we start out with a very brief discussion about professional standards, okay? We talk about standards in the financial class and the regulation class, and we're going to be talking about standards here in the early going. Really now, though, we're talking about auditing standards that are followed by auditors who are going to come in and audit the financial statements that we're talking about preparing in FAR and in the bar section of the exam. Do a brief discussion of different types of audit engagements, and really all I'm doing there is pointing you to some chapters that'll be coming up in the future that we'll be looking at. Forming an opinion, okay, and the discussion as to how that opinion is structured, okay. All of that you see right in there is really one subject, and that constitutes about 10 points on the exam, okay. So I'm thinking we'll get through about module 6 tonight. We'll probably do module 7 later next time, but then the 10 points are covered in those modules there. Okay, then we come back and also reporting with different opinions and different auditors is also part of that 10 points. Then we'll talk about subsequent events. Those are about 5 points. And then other supplementary information is about 2 points. And then when we talk about special purpose framework, that's about 2 points. Okay. Now, in the early going, students will ask me, well, what am I supposed to do with this point information? Are you trying to tell me, John, not to study module 11? No, I'm just giving you a sense as to where I know you're going to see several multiple choice questions in the multiple choice testlets on your exam. You're going to see task-based simulation. That's really what I'm saying with that. With these others, like a 5-pointer, you won't see as many multiple choice questions. You might see a single task within your task-based simulation, whereas in the other, you might see an entire task-based simulation just dedicated to that. These 2-pointers, 3-pointers, you might see a couple multiple choice questions, okay? It doesn't mean that you shouldn't study those. It's just so that you get a sense as to the impact that the different areas that we're studying will have on the outcome of your exam. But you need to study everything because you really don't know when that, weird freak occurrence is going to happen, or they might give you a little more on, say, the professional standards or something. Okay. All right, good. So as you come over, we start to talk about the professional standards. Okay. And when we talk about professional standards, we talk about them here in the context of the different types of engagements that they may cover. Okay. So we start out talking about statements on auditing standards, often abbreviated SASs. Now, what they do is they issue the SASs chronologically. Okay. But then they turn around and they do what? They codify those, and they codify them by topic. So, for example, we'll be talking about reporting tonight. Well, all the standards that relate to reporting will be in the 500 section of the codification of the audit report, even though there may be, say, an auditing standard that came out, several years ago, and then one may have come out, recently. They would all be contained in the same section of the codification. Okay, those standards are promulgated by the AICPA, the American Institute of Certified Public Accountants, and they have a board. I believe it's a 15-member board. It's a part-time board. It's a board of individuals that are in practice. They come to New York, I think, once a quarter or so, or maybe a little less than that. I'm not sure, maybe biannually. They come to New York, or I think it's New Jersey now. And what they do is they come together and they vote on different standards. The reason it's a part-time board, it's actual practicing auditors, is it is one thing to say what should be done on an audit. It is another thing to say what can be done on an audit. And so you need actual practitioners who understand that there need to be some nuances. So often when we look at the standards, what they'll say to us is, well, the auditor should do this, but, and then there's exceptions. And those exceptions are often based on practical implications of trying to do what the auditing standards are telling us to. And so I'll point those out to you from time to time as we go along. Now, when they issue the statements on auditing standards, those are for non-issuers. Non-issuers, guys, is a fancy way of saying non-public companies. Okay, these are companies that are publicly held. They're not trading stock. They are considered non-public companies. Now, of course, they're in the private sector because you have the public sector, which is government. You have the private sector, which is business, but they are non-public companies within that private sector. Okay. Now, when we move over to public companies, okay, and we refer to them as issuers because they are issuing stocks to the public. Okay, so these are public companies. Again, they're in the private sector, but they are public companies because they trade stock publicly. Then we go and we look at standards that are promulgated by the Public Accounting Oversight Board. Now, PCAOB was created in 2002 under Sarbanes-Oxley after scandals like Enron, WorldCom, in which it was started to see, hey, is the auditing profession really doing a good job keeping a close eye on their clients, these public companies? So what they established was this PCAOB. The PCAOB would basically look over the auditing profession, and they are tasked with issuing standards that are followed when you audit a public company. So the PCAOB will do reviews of audits that are done by accounting firms, but they also set standards that are to be followed when an auditor audits a public company. They issue those standards in Public Company Accounting Oversight Board standards, PCAOB auditing standards, okay? And when we look at the PCAOB auditing standards, there are about 20 PCAOB standards. Okay. If you look at the AICPA Auditing Standards Board, SASs, okay, there's probably statements on auditing standards. There's hundreds of those. I don't remember the exact number right now. There's hundreds of those. So you look and you think, well, great, I'd rather audit a public company because I don't have to follow as many standards, right? No. What happens is the PCAOB standards point to the AICPA auditing standards, and they say, follow those, and we're going to tell you to do some more things when it comes to a public company. So you still have to follow the AICPA standards, and then they have add-on things, additional things that they want you to do if you're auditing a public company. Classic example is if I'm auditing a public company as an auditor, I have to issue an opinion on the effectiveness of the auditee's internal control. I literally have to provide a report that speaks to the effectiveness of the internal control of that entity. And that is something that came out of Sarbanes-Oxley in Section 404. It was stated that auditors would now do that. And so the PCAOB writes standards to implement Sarbanes-Oxley being federal legislation, what the federal legislation said needed to be done there now. If you're auditing a non-public company, you're auditing a private company, and you're following the AICPA Auditing Standards Board standards, you obtain an understanding of the control, you evaluate the design, see if the controls have been implemented, and then you make an assessment of control risk. You may test the controls, you don't have to, and you don't have to, and I kind of buried the lead there, you don't have to issue an opinion on the effectiveness of internal control. Big difference between what you do for a private company where you don't have to issue the opinion on internal control, whereas for a public company, you would have to issue that opinion on internal control. And that's the nature of additional requirements that are covered under the PCAOB standards. So when we do an audit under the Public Company Accounting Oversight Board company standards for issuers, they really say, hey, a lot of the procedures need to be done as you would for a private company, but we're going to have some add-on things that we expect you to do. The other thing that we're going to see is there are minor differences. We're going to see this tonight. There are minor differences in the way the reports are structured. We're going to start talking about audit reports tonight. And so again, you're going to start to see some minor areas where there are differences, but there's also a great deal of similarity. And so the PCAOB standards point to the AICPA standards. Now, if you are auditing a government entity such as a federal agency, you have to follow the standards that are promulgated by the Government Accountability Office, GAO. That's the federal agency that I spent 26 years with. They issue the standards that are to be followed if you're auditing, say, a federal agency. If you're auditing a state entity or a not-for-profit, often you have to audit their financial statements under the General Accepted Government Auditing Standards, otherwise known as GAGAS, because they receive large amounts of federal financial assistance. And the rule is that if you expend more than, last time I checked, the dollar amount threshold was $750,000 of federal financial assistance, then you are going to have your financial statements audited according to the GAO standards, and they call it the GAO Yellow Book sometimes. They call it the Yellow Book, and I'm not going to get up. I know I have it somewhere on that back shelf right there. They call it the Yellow Book because it cover is yellow. They were going to call it the gold standard of auditing, and then someone thought that's a little presumptuous, and so they ended up calling the thing the Yellow Book. But it's the GAO standards. It's a fairly thin book. Maybe I'll pick it up at the break over here, and show it to you. But to a large extent, the GAGAS standards point to what you would do for a financial statement audit under the AICPA standards, and sometimes they point to the PCAOB requirements. So again, the auditing standards board standards really carry most of the weight. They're the ones pulling the cart. And then the other standards kind of say, okay, but we want you to do this extra stuff here, extra stuff there. When we get into GAGAS, that is going to be A6, very light on the exam. I think I have a 3-page summary that I wrote for you that I'll be giving to you for that when we talk about that. Okay. Statements on auditing standards. Okay. And these SASEs. Okay. Those come in if you are giving an opinion on something other than the historical financial statements for a non-public entity. Okay. For example, let's say you had a client that was a private client, and they said, we want you to audit our financial statements. And you say, okay. And they say, you know what? We'd like one of those opinions on the internal control that public companies get. Well, you wouldn't turn to the PCAOB standards because public company, PC, they're not a public company. So the AICPA has issued standards for times where you give an opinion, and that opinion goes beyond the historical financial statements. If you're giving an opinion on historical financial statements, you're up here. Okay, but if you start to give opinion on things that go beyond the historical financial statements, then you would follow the AICPA, once again, accounting on standards for attestation engagements, and that's abbreviated AT. Okay. Now, if you are going to give an opinion excuse me, something less than an positive assurance, an opinion on financial statements. So if those statements are unaudited, and again, that only applies to non-issuers. So sometimes a client will come in and they'll say, I don't want you to give any kind of attestation on my financial statements. I just want you to compile them. I want you to put them together for me, but you don't have to give any assurance on them. If that's the case, then if you're preparing the statements or if you are compiling the statements where you would issue a report, but you give no assurance, or if you give an assurance that is less than the assurance that you give under an audit, then you would follow the statements on standards for accounting and review services. ARC is how that's codified. And again, those are issued by the AICPA. Okay, so let's just look at these standards here that deal with the AICPA. Auditing standards, you're auditing a public company, you're going to give an opinion on their financial statements, historical financial statements. You follow what? You follow the statements on auditing standards. Those are codified AUC. If you are going to give an opinion on something other than the historical financial statements, maybe you're going to give an opinion now on the internal control of a private entity, then you follow the statements on standards for attestation engagements. Okay. If you are looking at historical financial statements, but you're not giving an opinion, you don't use the SASs anymore because you're not giving an opinion. You would come down and you would follow the statements on standards for accounting and review services, the SARs. And then if you're auditing public companies, follow the PCAOB, although they point to the ICPA standards. If you're auditing a federal agency or entities that receive significant amounts of federal financial assistance, again, I think the threshold is about 750,000, then you follow the PCAOB, the GAO standards. GAG is the General Accepted Government Auditing Standards. Okay. We talk about these statements on standards, these type of engagements, and we give you more information on those in the Audit 6 class as well. So we'll talk about some of these other areas when we get to Audit 6. And then a Code of Professional Conduct is something that comes out of the AICPA. It talks about members of the AICPA and how they should conduct themselves. Sometimes students will say, oh, good, so just don't join the AICPA after I get my license. I'm not a member of the AICPA. Just don't join them and then I don't have to follow this. What happens is most states, and I know the state of California does, they write in their accounting laws and regulations that you have to follow what this Code of Professional Conduct tells you you need to do. By the way, guys, some good news potentially on the horizon. It has to go through final approval, but the State Board of Accountancy has proposed that new licensees will no longer need to take the ethics exam. So when after you pass the CPA exam, you get your experience, you get your education, obviously, to take the exam. You take the exam, you get your experience. You have to have the additional units for your license. If you have your master's, they waive the additional 20. If you have to get the 10 units, including taking that 3-unit ethics class, which is Accounting 302. And currently, they make you take a 50-question ethics exam. The state board has proposed that the state eliminate that requirement for licensure. And so candidates, if that gets passed, will no longer need to take the 50-question ethics exam. So that's kind of good news for you. You won't have to take that exam anymore. What they're going to make you do instead is take a regulatory course that talks about the nature of those things, but I think it's a 2-unit class, and it's something that you can take online, and you don't have to turn in an exam or anything like that. So that's a change that is on the horizon. But the accountancy law in the state of California, the regulations in the state of California, to a large extent mirror what's in the Code of Professional Conduct. And the reason that they've backed off of making you take an exam on it is covered, although light, on the CPA exam. And we'll talk about that a little bit when we get into Audit 6. If you've already taken Accounting 302, you know a lot of this stuff already. Okay. And then when we get to statements on quality control standards, I want to say that we're going to talk about those in Audit 2. Forgive me if I'm quoting that wrong as to what class we get that into. I think it's Audit 2. We'll cover that. And that talks about how to structure your entire firm to ensure that your audits follow these various standards. And so we'll get into that. Okay, all right. That's just a, obviously high level overview of the different standards. Okay. Now, the most authoritative standards, most authoritative standards are the SAS's, the PCAOB auditing standards. When you're doing an audit, the main thing you have to follow are these PCAOB, these statements on auditing standards, statement on auditing standards for private company, Public Company Accounting Oversight Board standards for public companies, okay? But there's other things out there that you can look at. For example, and again, I should have probably pulled some things off my bookshelf here. I have a lot of this stuff behind us. There are, behind me here in my bookcase, I saw a comedian the other day saying, why do people have bookcases? Is it to prove that they've read all those books? And I'm like, well, no, there are reference books. I'll pull something out and look something up from time to time for clarification. So a lot of this stuff is sitting back there. It's not as authoritative as the statements on auditing standards issued by the AICPA, the PCAOB standards issued by the PCAOB, but they do provide some help, some additional guidance, and they are seen as authoritative. They get more into detail. And if you are really looking for additional detail, you might prescribe to the Journal of Accountancy or something like that, different publications by the AICPA. But the most authoritative, the thing you follow, are those auditing standards. And then you can supplement your understanding and whatnot with some of these other things, or supplement what you do with some of these other things. Sometimes they'll give specific examples. They'll show you ways that you can achieve the different things in the standards. Okay. Okay, good. So I guess, if the standards are the 10 Commandments, then, the book from your minister that tells you how to implement the Bible, is some of this other authoritative stuff, if I need to get religious on this. Okay. Okay, good. Now you come down and you take a look at the audit process here. Okay. Now this is helpful because sometimes a question will say, in the initial phases of the audit, the auditor will, and they'll start talking about evaluating audit results. Well, that's the wrong answer to that. In the preliminary stages of the audit, you're doing what? You're doing audit planning, those sort of things. So my point there being, there are times, and I'll point this out to you as we go through class questions, that you can answer the question, or at least eliminate some of the choices just by the fact that they're saying in the initial stages of the audit. That's not when you're writing the report, obviously. That's towards the end of the engagement. Now, having said that, we're going to start at the end tonight. Okay, we're going to start at the end. We're going to start talking about the audit reports tonight. And the reason we take this approach is that often throughout the materials, we then start going through the planning and whatnot. It'll talk about the effect on the report for certain things that we find as we go along. And if you haven't understood how the reports work yet, that outcome on the report when we start to talk about various topics falls flat, right? So we'll go ahead and we'll start out talking about the reports, even though that's at the very end phase of the audit. Then we'll come back starting in audit two, really, and we'll start talking about the planning and whatnot. Okay. Okay, good. Now we come over and let's talk about independence. What happens? By the way, do you know why they call you an auditor? Why are CPA, why is you're working to get your license? That, by the way, I don't know if people realize, you get a CPA and you get used to this, guys. Even if you're not a tax person, people find out you're a CPA and they start asking you all kinds of tax questions. And I'm always like, I'm not a tax guy. And somehow they don't hear me. They'll say, well, can you come by and I'll buy you lunch? And can you take a look at a couple things? And I'm saying, okay, I'm not a tax guy, but I can certainly look at some accounting things. And I'll look, and it seems like 99% of the time it's back to they want me to look at a tax issue. And I'm like, I'm not a tax guy. The CPA gives me a license, gives me authority in the state of California to issue an opinion on financial statements, not to do your taxes, right? Okay. So why do they call CPAs an auditor? Why this word auditor? That's a question. So we're done? We can go?
Because
I know all this stuff already. Yeah, go ahead.
yeah, I think it's because mostly the auditor's work is really on the financial statement more than on the tax field.
Yeah. As I stated, the accounts, the auditing profession, okay, goes back to the 1800s. Okay, when you look at the movie, it's the book, A Christmas Carol, but you see it in movies and cartoons and stuff during holiday time. And if you listen carefully, or if you even read the book, you'd start to see that what's going on with Scrooge's firm, Scrooge and Marley, or Marley and Scrooge, whatever it was a CPA firm. They called it their accounting house. Okay, so this profession dates back to England and whatnot. And if you read, what was going on in, England and Europe at that time, most people were illiterate. This idea of everyone being able to read, or most people being able to read, is something that's relatively new. Okay. And so what happens? If auditors went and examined something, they were to be heard audibly because they would stand out in the public square, whatever it is, and they would testify, they would attest as to what it was that they were finding based on their look at different subject matter and whatnot. So that's why you're called an auditor. Now, if somebody's coming in and they're looking and they're giving an attestation, and the attestation that we're studying here is that the financial statements were prepared in accordance with the applicable framework, which is usually in the United States, the Financial Accounting Standards Board standards, right? When we give that attestation, that opinion, we need to be independent from the company. Okay, so that's why, as you work for a CPA firm and whatnot, they'll make you fill out a ton of paperwork when you first start so they know that you're independent of various clients, and they'll ask you to tell you, who you have some sort of connection with, if you own stock in a company and whatnot, so they know not to assign you to that engagement. Okay, so it's a big deal. So what happens? The auditor, the cornerstone of everything we do is the auditor needs to be independent to issue an opinion on whether or not the financial statements are in accordance with, and they always give this highfalutin applicable framework, to a large extent. For us, it's United States General Accepted Accounting Principles promulgated by the FASB. Could be what? The International Financial Reporting Standards. If I'm auditing say a state or local government, I'd be following the standards promulgated by the Government Accounting Standards Board, GASB. If I'm auditing a federal agency, Then I follow the standards promulgated by the Federal Accounting Standards Advisory Board. Different entities set standards for different entities. That's why they say applicable framework. For the most part, we tend to focus in here when we're preparing ourselves for the auditing exam, but they use this more general applicable framework. Okay. Now, because the auditor is independent, they give credibility to the financial statements. Management prepares the statements, the auditor gives the opinion. Okay, so management is responsible for preparing the financial statements, designing the appropriate internal control, whereas the auditor comes in behind management and does what? The auditor is independent and they express an opinion on the financial statements. Okay. Now, to do that, auditors must maintain something called professional skepticism. What happens with professional skepticism? It doesn't mean that you're always distrusting management and whatnot, but if things don't look right to you, you have an obligation to follow up on those things until you can get a clear understanding as to the nature and impact that a situation, whatever is going transaction is going to have on the financial statements. The best way to exercise professional skepticism, if you're doing an audit procedure, okay, and you're not getting satisfied, first of all, you got to know what is the procedure trying to accomplish. Why am I doing this procedure? If you don't know why you're doing the procedure, you're not doing your job. Okay, so the first thing you need to do, if you don't know why am I being asked to do this, is to turn to your manager and ask, what are we trying to achieve with this procedure? Okay, number one. Then, if in doing that, and you know the reason you're doing it, and you're not get a feeling that you're achieving the objective of that audit procedure, you need to continue to look at that until you figure out whatever it is you need to know to satisfy yourself that that particular transaction, that procedure has met the objective of the audit procedure, and the thing is properly recorded in the financial statements or disclosed, whatever it is. Okay. Now you also need to comply with ethical requirements, exercise judgment, obtain sufficient appropriate evidence, and comply with generally accepted auditing standards. Now, sometimes we'll see questions in the homework and whatnot that'll say the auditor is doing this procedure, and they'll say to comply with generally accepted auditing standards. That's not why we do a procedure. That's always the wrong answer. We do a procedure to achieve some audit objective. Okay, so be careful with that. Now, again, professional skepticism. Okay, and they're telling us that the auditor needs to be alert for evidence that contradicts other evidence obtained. You get a piece of information and it's not consistent with another piece of information. You've got to reconcile that. What's wrong? Okay, why is that the case? Okay, information that calls into question the reliability of a document. One of the things that in my experience would make me a little nervous is if it took management what I felt was inordinately long to get me something that I had asked for. In my mind, it's something that should be readily available, and then it takes days to receive that information. You might start asking, can I please understand better the procedure that you're going through? Can I come to the area where this information is being produced? Can I watch it being produced, whatever? Okay, that's professional skepticism, because now you're not understanding why it's taking them that long. Okay, now what starts to happen, and where we really want a flashcard, is impediments to acting with professional skepticism. And at a high level, okay, what starts to happen if you've been on an engagement for some time? You audited them last year, you audited them 2 years ago, you audited them last year, you audited them this year, and you start to lose your professional skepticism almost subconsciously. It's sort of like, well, I'm driving home and gee, I get into my driveway and I'm like, how did I get here again? Because you were thinking about all these other things because you know the road so well, right? So you start to lose your perspective a little bit. Okay. So unconscious human bias may cause the auditor to evaluate and recall information that favors the interests of the client instead of the interest of the investor. It's not that you're doing it on purpose. It's just that you've become maybe a little too familiar with that client. Okay. So you start to develop a level of trust in management. Okay. Maybe you don't want to have negative interactions. Um, Unfortunately, I felt like I was always the guy that had to go in and sort of, push things a little bit because some people they're not confrontational. And so if you're a partner and you're assigning people to an engagement, you have some concerns about, the integrity of management and whatnot on that engagement. You might look for maybe a little heavy hitter who does have a personality that allows them to go in and maybe ask some tougher questions. Okay. And just scheduling of workload demands as well. So these are the kinds of things that could impede acting with professional skepticism. Why don't you go ahead, guys, and flashcard at a high level, some of the things I highlighted here that could be impediments to professional skepticism. Again, it's not that you're always questioning management or making them feel like you don't trust them, but by the same point, you don't have an unquestioning you have a questioning mind about things. Okay. And so ultimately what you're going to do is you're going to always, okay, and let's just put that in here, evaluate reliability of, that says reliability, evaluate reliability of evidence. And I think I told the class the other day on Tuesday, my writing is very sloppy, and then the pen and the book. And so I will always call out what it is that I'm writing down. And so if you can't read my writing, just listen to what I'm saying. You will always evaluate the reliability of evidence. You always have to evaluate the reliability of evidence. Okay, so if management gives you something and it's supposed to be one document and all of a sudden you notice a different font down there, what happened? How come the font changed in the middle of this document or something? Maybe it's okay, but maybe it means something. This, what is it, GBT chat, you know that starts to create a problem because it's the artificial intelligence and stuff starts to get really good at creating documents and stuff. By the way, you're not fooling your instructors when you turn in an essay using what is it, what, GBT?
It's Chat GPT.
Chat GB or P?
T is in Paul.
Say it again.
T is in Paul.
Well, I heard that, but what is the P? Where's the P in there?
A GPT.
GPT, Chat GPT.
You're right. It sounds completely robotic when you read it.
Yeah, it's like really obvious. And I've had a couple students turn those in, and I'm just like, are you kidding me? Come on. So, but I think it's going to get better as time goes on. But anyway, okay. All right. So let's come over and to me, and then I'll stop. There's nothing wrong with using that tool to kind of see, well, oh, okay, here's a way of approaching it. I don't see a problem with that, but then make it your own. It's a tool, but don't think it's just something that you just take and you just throw it at somebody and say, here's the answer to that, because it's not. Okay. All right, good. Now let's come over. In my opinion, there's nothing wrong with doing it that way. Your other instructors may have a different feeling. I don't know. Okay. Now we do exercise professional judgment. Okay. And I'm here to tell you nothing replaces judgment, and judgment is not shared. Okay. So any CPA exam question that is trying to get you to think that it is correct to um, not exercise judgment or share your judgment with somebody else, that's wrong. At the end of the day, the auditor makes all judgments. Now, what happens? It's hard sometimes when you're a student, you're just starting out in your career and whatnot, and you think, well, I'm not in position to make those judgments. The partner should be making those judgments. And you're right. But the way the CPA exam looks at questions, they expect you to understand the responsibility of the partner. Okay. What would the partner be thinking at that point in time? So often you need to put yourself in the seat and the shoes of the partner, but you never, ever choose that, hey, we share our judgment or we give off our assessments to somebody else. Does not happen. Okay. Okay, good. Now, when we come over, we start to determine the scope of the engagement, and the scope of the engagement obviously will be different if it's a non-public company, a non-issuer versus an issuer. For example, if we are auditing an issuer, we're going to go further and give an opinion on internal control. When we say that's covered later, we mean much later in audit 5, I think is where we start getting into the opinion on internal control, which is only required for public companies, not non-public companies. Okay. Okay, good. Come over and let's take a look at the objective of the financial statement audit. And again, the objective is to obtain reasonable assurance. Reasonable assurance. We do not provide absolute assurance. Any CPA exam question that is trying to get you to think that you do a procedure to which there is no doubt that the financial statements are fairly stated, that's wrong. It is reasonable assurance. The reason we say it's reasonable is that what? Someone could always be slicker than us, okay, when it comes to hiding things from us and whatnot, and we have to acknowledge that. Further, we don't necessarily have the resources to give absolute assurance, okay? And then there's always something that maybe nobody knows about, okay, that's included in the financial statements. And so it's what? It's reasonable assurance that the financial statements are free, and it is free of material misstatement, okay? Material misstatement. Material means that the misstatement has the ability to make a difference in someone's decision. Now, there are both qualitative and quantitative aspects to materiality. We'll talk more about materiality, I think, audit 2. But there are, in the A2 class, but there are, chapter A2, there are both qualitative and quantitative. For example, quantitative. If I had known the financial statements were misstated by $25 million, I would have never bought that stock. That is what? That is obviously a large number. That's a quantitative assessment of materiality. Qualitative assessment of materiality would be if I had known the financial statements were materially misstated by $25,000, the dollar amounts come down. But because of management fraud, now we've brought in a qualitative aspect. I would have never bought that stock, let's say. So something that has the ability to change the decision of a user of the financial statement is considered material, whether quantitative or qualitative. So a 2-cent error, the chance that, that would be done by fraud. Why would management bother? Okay. And what the chance that 2 cents is material to a user of the financial statements is highly unlikely. So we're not doing enough procedure to find 2-cent errors, right? We're looking for I always call it, you look for the baddest and the biggest. Baddest qualitative, biggest quantitative. Okay. Whether financial statements are misstated due to error or fraud. And we're going to talk about the auditor's consideration of fraud. Again, I think that might be audit 2. Okay, that's really what we're trying to accomplish with the audit. Okay, when for public companies, and we'll get to this later, we look at the internal control over financial reporting. We are really looking to see if the controls are effective. And again, that's for public companies, and we'll talk more about that later. They say in some cases, non-issuers can ask us to do that. It's not required. If they do, then we would go ahead and we would follow the attestation standards, the statements on standards for attestation engagements, which we'll get to in a different chapter. Chapter 5, I think, they give us another set of standards if we're doing that for a non-public company, if they ask us to. They talk about doing it for government entities. Very rare, very, very rare that a government entity will ask you to give an opinion on the effectiveness of their internal control. And the reason is they don't want to hear, they don't want the heat, because the internal controls in federal agencies and many state agencies and state and local governments are crap. And they don't want for it to come to public light from their auditors, all the different things that are coming out. And I don't think the auditors really want to deal with it either. Where you see these things talked about for government entities often is in their auditor's office. So if you pick up like a county auditor's office report, there you'll see discussion of these things, but county auditors and whatnot, the nerds like me look at their reports. For the most part, it's not something that's being digested in the general public. But if they were issuing these in their annual reports, their comprehensive annual reports and whatnot, they would get more attention. But anyway, okay. Okay, good. Let's come over and we'll get into the requirements when non-public companies and public companies get an opinion on internal control in audit 5. Okay, so what I want to do, and I like to bring in questions, but for some reason, I don't agree with the decision. Becker decided to take questions out of the textbook. And so I'm going to an earlier version of the textbook to see some questions that we can sort of see how we would implement, understand what we just learned in a form of a CPA exam question. Now, you don't have this in your text in front of you, but I'm putting it on the screen, and then you will be able to find that question in your homework. You'd put in 2298, you don't put the 0 anymore. You'd put 2298, and this same question would come up. So it may not be a bad idea to write down somewhere on your notes here that we covered question 2298, and then you will see it again in the homework. Now, I feel like the world is trying to stop me from giving these polls because, let's see, will they let me launch it? Now, see, now here I can launch it. In my class last night, they wouldn't let me launch it, but tonight they are. So there it goes. Okay, so you can see it. So maybe they fixed the problem in the other class because I complained today. I didn't complain, but I asked what's going on, and now it's launching. So maybe they fixed it for me. Okay, so here it is, guys. Go ahead and take a look at this question. I usually give about 2 minutes on these. Okay, looks like about everybody's had a chance to work this one. So even though we're just about a little under the 2 minutes, but we're about there, I'm going to go ahead and share the results. And good. 71% of us got this right. The answer is C, but let's take a look at this one. And you start looking, and which of the following provides the most authoritative guidance, okay? And we saw what? Accounting guides, okay? But those were listed what? Those were listed audit and accounting guides. Those were listed about the middle, okay? Those were not the most authoritative. I was pointing in my bookshelf. You have these accounting guides that cover different subject matter, but they're not the most authoritative. Tempted to go grab one. Hang on a minute. Okay, so what happens? What's this? Okay, you have the standards, the SASs, the PCAOBs, right? But those are written, in a very, there's not a lot of examples and whatnot in those, okay? And so what happens? For example, the standards say, they talk about obtaining evidence. Okay, and SAS 39 starts to talk about different ways to use sampling and how an auditor may use sampling. Okay, but it's at a high level. Okay, in that SAS 39. Okay, which is codified in the standards. Then, because we need additional guidance and examples, they give us this guide. This guide, has all kinds of reference tables and whatnot that you wouldn't necessarily see in the standards themselves. But this is giving you additional tools and additional examples that can be used to help implement the standard. They're not as authoritative of the standard. Okay, they're helping you to implement the standard, which is the most authoritative. Now, what happens? Sometimes this may be a little complex. Okay, so then, I have a textbook on audit sampling that I use primarily. Well, I'm not doing audits. I'm not necessarily practicing audits now. But if I'm teaching, something about probability proportionate to size auditing, which we'll get into later, it's nice to have some additional, examples and thoughts and whatnot that can be given. And these would be the least authoritative. You start getting down to textbooks and publications and whatnot. Those are the least authoritative. Okay, so that's what that table that we were looking at earlier was doing. So I forget now. I think for you folks, for some reason, wanted to pick a Journal of Accountancy article. That's at the bottom. Guidance in these statements on auditing standards. Now, what I suspect happened and why everybody didn't pick C and the CPA exam likes to do this too, they say general guidance, and you think, oh, well, that's not as good as specific guidance. You don't look to the, what do they call that? Adjectives that describe the guidance. You look to what is the guidance, okay? So the statement on auditing standards. Interpretations interpret the most authoritative. So they're not the most authoritative. They're interpreting the things that are most authoritative. They're probably in that middle level. Okay, so be careful, guys. And if you missed it because you're watching TV rather than or doing homework for another class rather than following along with the lecture, at some point I'm going to start calling out when I see choices that are obviously wrong based on what we've said. I'll start calling out folks to see why they selected those. So you need to be following along and paying attention. Okay. Okay, good. let's come over then and let's go and take a look at, any question on that question before we move on? Okay, good. So let me go back to the main textbook, the more current textbook. Okay, and let's start to take a look at now the opinion. Okay, now again, the opinion is the last thing that the auditor does, where the auditor forms conclusions, but we're talking about it now so that later on when we see things that impact the auditor's opinion, we can refer to the opinion and you'll know what that means because we've already talked about it. Okay, so let's just go ahead, and I like to call this the grapefruit down here. Okay, because it has these different colors and whatnot. Looks like a half a grapefruit to me. And we start to sit here and we talk about different outcomes for the auditor's report, okay, based on different issues that can come up, either audit issues or financial statement issues. Now, the way this graphic works is we're either on the audit issue side or we're on the financial statement issue side. Okay, that's the way you are to use this chart. Okay, now what I'm going to do is I'm going to use some highly technical graphics to show you the mood of the auditor, if you will, when you're giving these different types of opinions. Okay, so when an auditor gives, and it's an unmodified opinion, if we're talking about non-public company, if we're talking about public company, they call the report unqualified. And this is the kind of stuff that annoys me to no end. You mean to tell me they can't get on the same page as to how they're calling out the clean opinion? Okay, really? Do they have to have a difference there? Why? Okay, so that's just stubbornness is all that is on the parts of the standard setting people that for whatever reason decide they can't have an agreement. Okay, so unmodified, unqualified. Okay, unmodified if we're following the auditing standards for non-public, unqualified if we're following the standards promulgated by the PCAOB. Okay, probably unmodified is a better word, but anyway. Okay, but when the auditor gives an unmodified, unqualified opinion, the auditor is happy. The auditor is looking and saying, we've done our audit procedures, and in our opinion, the financial statements are free of material misstatement, whether caused by error or fraud. They are free of material misstatement. In other words, investor, creditor, user of the financial statements, you can rely on these statements to make your investment and credit decisions. Well, that's big. Okay, that's what the license that you're studying to acquire, that license allows you to do that. And sometimes when I'm first teaching students accounting, I'll say, does that mean a lot to you? And they'll say, no, it doesn't mean anything. That's kind of like the police pulling you over. And you say, well, all you have is that badge. I don't have to listen to you. Well, it's everything that goes behind that badge, right? It's everything that goes behind that statement that makes that statement so important. Okay. Now, let's just take this to a silly little example. Let's say your friend is getting ready for a job interview. Okay. And they say, hey, I'm getting ready for a job interview and I've got my clothes ready that I'm going to wear to the interview. And I want you to tell me what you think of my outfit. So you go over and you look at the outfit and they nailed it. Suit, shirt, they're wearing a tie, whatever, shoes, socks, everything, they nailed it, right? And you're like, okay, I don't know, how well you're going to actually do in the interview, but based on your outfit, I give you an unmodified, unqualified opinion that you are dressed well for this interview. Okay. Now that's good, right? Okay. Now let's come over and let's start to look at financial statement issues. Okay. And what happens if an auditor qualifies an opinion? And again, that word is the same if we're talking both public or non-public. Okay. If the auditor gives a qualified opinion, the auditor is sad. Okay. What happens? The auditor has found some instance, a material instance, where the client has not followed generally accepted accounting principles. So let's say they had some leases that met requirements for being a capital lease, and they didn't treat it properly as a capital lease. Okay, what happens? They didn't follow GAAP, and the auditor would call that out in their qualified opinion, saying there was some aspect of GAAP that they did not follow. GAAP says put a green elephant on every page of the financial statements. They didn't put a green elephant on every page of the financial statements. That's material. So I'm calling that out in my qualified opinion. Okay. Go back to your buddy's outfit. Buddy says, come over, see my suit. He comes out, whatever. And when you get to the shoes, he's wearing a pair of Air Jordans. Do they still make those? Okay, wearing a really nice pair of, I have some friends, I'll see their shoes and they'll say, oh yeah, look at John, I got these shoes. They're Christian Louboutin tennis shoes. They're red bottoms, how much do you pay for? Oh, I paid $1,300 for these shoes. Really? Okay. Pair of tennis shoes. So what happens? Let's say your friend comes out in Christian Louboutin tennis shoes and you say, that's what you're going to wear to the interview? And you say, no, you need to change those shoes. You need something that's more appropriate for business attire, whatever. Okay. So what happens? You give a qualified opinion. You say your whole outfit is good, except for the shoes. And you call out your disagreement with the shoes. And the shoes are material to the outfit, right? Okay. So you're giving a qualified opinion. Okay, now coming down, and again, remember guys, we stay on one side as we consider the varying degrees. Okay, this is a GAAP issue, really, generally accepted accounting principle issue, financial statement issue. Okay, and we start to do adverse opinion. And again, the name is only different when we're talking about the unmodified, unqualified. Both public and non-public use the same name for the others, qualified and adverse. Okay. But now, not only is the auditor sad, the auditor is crying. Now there is such a big issue that is not allowing these financial statements to be in accordance with generally accepted accounting principles, or there are several issues that have built up. Now the auditor says these financial statements are not in compliance with generally accepted accounting principles and are not sufficient to be relied upon for business decisions. So now you're saying step away from these financial statements. So let's say the client not only didn't capitalize some leases, they didn't account for their inventory correctly. There were several large receivables that you couldn't get support for. I shouldn't say couldn't get support for, but several large receivables that you determined were overstated. All of those problems build up to an adverse opinion. Okay. Now, go back to your buddy's outfit. Now your buddy comes out and they come out in a sweat outfit. And they say, well, look, I want to show that I'm, not that pretentious and I'm not full of myself. So I don't want to dress up too much. So I'm going to wear sweat clothes to my interview. And you say, no, are you kidding me? No, you won't even get in the building if you wear that. Now you're giving them what? An adverse opinion. Okay. So notice, guys, when we're talking about accounting issues, financial statement issues, GAAP issues, the auditors decided between unmodified, qualified, or adverse. And it really depends on the materiality and the pervasiveness of that issue that determines whether it should be qualified or adverse. Question. Okay, good. Now when we get to audit issues, okay, or you could call it gas problems, gas issues, because now what happens is we're not able to apply all of the generally accepted auditing standards that we should have. So if the auditor qualifies here, again, the auditor is sad. And the auditor is saying, there's some procedure that I wanted to implement that I was not able to fully implement. And had I been able to, I could have possibly given you an unqualified, unmodified opinion, but because I didn't, I'm qualifying my opinion. Okay. Go back to your buddy's outfit. Let's say your buddy comes out and they don't have the shoes they're going to wear for the interview. Nice socks, but not the shoes. You say, what shoes are you going to wear tomorrow? And they say, oh, I haven't picked out the shoes yet. I got to stop on the way to the interview. The interview's not until later in the afternoon. I'm going to stop in the morning. I'm going to get the shoes and then I'm going to go in. But don't worry, they'll be nice shoes. Well, what happens? You'd say, well, then I can't give you an opinion on the outfit because I can't see the shoes. So you'd say, in my opinion, your outfit looks good, except for what I would have been able to tell you about the shoes had I been able to see them. That's a qualified for audit issues. You couldn't apply the procedure of looking at the shoes. Okay. Now, when our audit issues, gas issues go from bad to worse, okay, finally the auditor may disclaim an opinion. And now I'm not even putting a mouth on the auditor. I am simply shrugging the auditor's shoulders because the auditor is saying to you, I don't know. I don't know if the financial statements are fairly stated because there were so many procedures that I couldn't apply that I am basically telling you, I don't know if the financial statements are in accordance with the applicable framework, GAAP, whatever it is. Okay. Now, go back to your buddy's outfit. Let's do it this way. Go back to your buddy's outfit. And the buddy calls you and says, hey, I want you to come tell me what you think of my outfit for my job interview. And you say, okay, I'll be right there. No. Don't come over. From the sound of my voice, tell me what you think about my outfit. And you're like, of course, this example is losing some steam now because now everybody's got a camera phone, but before a camera phone, they say, from the sound of my voice, tell me what you think of my outfit. And you're like, and my camera's not working on my cell phone. You say, well, I can't give you an opinion because I can't. Are you crazy? I can't tell from the sound of your voice. Okay. So you would do what? You would disclaim an opinion. Adverse opinions, we don't see much in practice. Disclaimer happens. Okay. It happens in the federal government when, I was on the audit of the consolidated financial statements for the federal government, and I was on that for the first year. We got this fancy little thing that said we did this, but what the sad thing about it is inside the report itself was a disclaimer of opinion on the consolidated financial statements of the federal government. Couple reasons. One, the balance sheet doesn't balance. Okay, the balance sheet doesn't balance because the federal government has a system that prepares the consolidated statement, and then they have 32 different systems that are used for the entities that get consolidated up into the consolidated statements. And guess what? The two systems can't talk to each other. So it's kind of like, you prepare a consolidation and then you try to back it down into the individual companies. No consolidation works that way. You start from the bottom up as you make eliminating entries. And so there's always some eliminations that don't follow through properly, and the balance sheet ends up not balancing. Well, as the auditor of record, the Government Accountability Office has some problem with that. Okay, and you end up disclaiming an opinion. Now, what's that? First year was 1997. We're almost up on 2027. So that's 30 years. Am I doing my math right on that? 2027 to 1927 to 1927. 2027. Am I doing my math right on that? It doesn't seem possible. 2027 minus 1997. Yeah, 30 years. And they still have that problem. 30 years is the entire career of somebody in government. So I don't know. Okay, so that happens there. The other problem is that nobody can get an audit on Department of Defense. And sometimes students say, oh, that's because they have all kinds of nuclear secrets and stuff. No, you can get a Q clearance that would allow you to look at nuclear secrets and be able to audit those financial statements. They have a certain level of clearance. I never wanted the highest level of clearance because I knew they'd start talking to people I didn't want them to talk to because they, don't want to share national secrets with everybody. And so what happens? You could get that. The reason is that the Department of Defense has a terrible system of keeping track of its assets. Its asset management system is atrocious. They're good at blowing other people's assets up. Keeping track of their own assets, they're not so good at. Okay. So again, when you look at the gas issues, your decision is between what? Qualified or disclaimer. If there is a question that says there's a problem and there's a choice that says the auditor has a problem and they're trying to decide between a disclaimer or an adverse, that is wrong. That is wrong. There is no situation that causes the auditor to decide between a disclaimer and an adverse. You stay on the proper hemisphere of this chart here. If it's a gap issue, then there's a problem. The decision is between qualified or adverse. If it's a gas issue, the decision is between what? Qualified or disclaimer. Okay. Okay, good. So that gives us a little sense as to the logic behind these. Now let's take a look at some of the text material. And an unmodified opinion says that the financial statements are fairly stated in all material respects. Okay, and again, we say for non-issuers, the term is unqualified. For issuers, and I don't know where they say, it's called, unmodified is for non-issuers, and for issuers, it's unqualified. So I already told you that. Okay, now you come over, and when you start to modify the opinion, it could be qualified, and that applies to both what? Gap and gas issues. Okay, and in those, we're going to see that you'll use the word except for the shoes, right? Okay. And then when we come over to the adverse opinion, okay, adverse opinion states that the financial statements do not fairly present, and disclaimer says that the auditor does not express an opinion. Okay, so this is what? This is because there's a gap issue. This is because there's a gas issue. You weren't able to apply all the procedures you wanted to. Okay. Okay, good. So with that, yeah, let's take a look at another question, and then I think we can take a little break here. I think it is better if I stay in full screen now. It is. So we can find it a little faster, I think. Yeah. No. Okay, I should have put that question out though. Yeah, okay. Why not? I'll put this question up now, and then I'll put another one up in a minute. So let's look at two questions. Let's look at this one. Okay, we're about 2 minutes now, so let's go ahead and take a look at this one. There's a couple of us that didn't get a chance. Okay, good. Everyone's kind of, the polls are pouring in here now. Okay, yeah, about half of us got this right. This is a little bit of a tougher question, but let's take a look at it. Okay, so when you look at this one, which of the following is not an example of application of professional skepticism? Now, let me ask you this. With professional skepticism, do you think it is if someone hands you a document, and the document doesn't look authentic, would you be exercising professional skepticism there?
Yeah, if you questioned a document that didn't look authentic, that would be
Yeah.
skepticism.
Okay, good. You see a document that that's inconsistent with a statement that management made. Would that invoke professional skepticism?
Yes.
Yes.
Okay, good. You observe an inventory item, and when you ask for a document that shows when they purchased that item, it takes them a long time to provide you that document. Would that raise up your professional skepticism?
Yes.
So in all of these instances, what was happening is you're receiving evidence from the client, statements, documents, you were making observations, and there was something about that evidence that caused you to go, that's professional skepticism. With me so far? Okay. So when we look at this, which of the following is not an example of professional skepticism? Designing additional procedure to obtain more reliable evidence? Yeah. If you're asking for more evidence, that must mean that the evidence you have raised a skepticism of some sort. Okay. So we're looking for the one that is not. And be careful, guys. Always read through the choices, because the CPA exam does that. They put not in there and you're in a hurry and you're trying to work your multiple choice questions and you miss the not and you see the first one and you think, oh yeah, that's professional skepticism. You don't read the rest, you won't catch that, hey, they were looking for the not, because there can't be two right answers. Obtaining corroboration of management's explanations. Yeah, you're trying to do what? Evaluate their statement a little bit more, aren't you? You're exercising professional skepticism by getting more information. Inquire of prior year engagement personnel regarding their assessment of management's honesty and integrity. Show me the evidence you're looking at there. There's no evidence there. You're simply what? Asking about somebody else's decisions about their honesty. I mean, it's something that you do, but it's not exercising professional skepticism. Professional skepticism says, I have a piece of evidence in front of me and I want to make myself more comfortable with it. Okay. And inquiring about the prior year's engagement personnel regarding their assessment about management's honesty is not an evaluation of evidence. Okay. Evidence comes from the client to the auditor. D, using third-party confirmation to provide support for management's representations. Yeah, management said something to you or gave you something in writing, and you go to another party to see if it agrees with this evidence that management gave you. That's professional skepticism. Okay. Okay, good. Let's try another one. I think there was another question down here. I should do it this way. There it is. Let's do this one. Okay, we're at about 2 minutes here. So let's go ahead and let's take a look at this one. There's still a couple of us that haven't weighed in. So, what do you think, Moen? Moen?
I can go if she can't.
Oh. Well, no, I gotta write that down. I'm trying to find the right pen to write down non-responders, so I know who to start to indicate issues. Okay, what do you think, Ashinabandananda? Am I saying it right? Ash, AKSHITADEVAN,
Akshita. You can call me Akshita.
Ashkita. What do you think?
I was thinking it might be A or B, but I just put B because
Okay,
I'm not sure if it's pervasive or not.
okay, good. The answer is B.
Okay, I did put B though.
Good.
Okay.
And the auditor, oh wait, what am I saying? Yeah, the answer is B, where the auditor would be on if it's a issue that is not properly accounted for or disclosed, okay, then they're saying that's a gap issue, an accounting issue, right? And if it's an accounting issue, we're on that right side of the grapefruit. And we're saying, hey, I have to decide how pervasive, how material it is. And as it gets more material, more pervasive, I'd go from qualified to adverse, right? Okay. There is no situation that can really be articulated in a CPA exam question in which the auditor is sitting there and saying, well, I'm either going to give an adverse opinion, which says I have evidence to say that they really, really messed up, or I'm going to give a disclaimer of opinion, which says I don't have evidence to give any kind of opinion. Those are diametrically, what's the word? Diametrically opposed to each other. Those are opposite situations. One is saying you don't have the evidence to give any kind of opinion. The other is saying I have enough evidence to go all the way to say that the financial statements are not in accordance with GAAP. So there is A would be very bizarre situation, and I don't think that a CPA exam question is going to ask you that. How about you, Gage? What'd you get? Gage? We can't hear you. Okay. How about 10 May? What'd you get? 10 May. Okay, thanks, Gage. Liran?
Yeah, I chose A, but like you explained, it completely doesn't make sense. A disclaimer of opinion. I just saw the adverse opinion and then material effect of illegal act.
Right. Okay. Okay. Right. But or a disclaimer. Yeah. Okay, good. Thank you. Mike?
Yes, Professor. The first thing that I just analyzed about the question was the issue that it was properly accounted for or disclosed, then it does not say anything about the pervasiveness. So I just go for the B because it can be accounted as a qualified opinion, but depending on the pervasiveness can go down to the adverse opinion. So I
Good.
say
Well stated. Excellent. Nicole?
I chose B as well. I it didn't I don't think I knew what emphasis of or couldn't remember what emphasis of matter meant, but
Yeah. I mean, some of the choices probably need to be thrown out because we haven't talked about them yet.
right. So I was like, I don't know what C is, and it was a qualified opinion. So that's what I went with. B.
Okay, good. Yeah. Okay, good. And what do you think, Joy?
I chose B as well. I was originally looking at first A and B because of the adverse opinion. But then when it said that disclaimer of opinion, I was a little confused. So I'm like,
Yeah.
okay, this makes sense. So I
That doesn't happen. Yeah, right. Exactly. Okay. Okay, good, good, guys. Good work. Okay, so we're gonna take a break. So I'm gonna say, why don't we come back at part of me looking at the break is going late for the break, and so I want to cut the break short, but I don't want to cut you too short. That's okay. So I'll tell you what, let's just go ahead and come back at it's always those weird times. Let's come back at 7. Okay, we'll go ahead and just come back at 7. This will be a little over 15-minute break. Okay, I'll give you some time. And the goal will be to get through module 4 before the end of class. Okay. All right, guys, I will see you in a little while. Okay. And let's start to take a look at module 4 now. Is it module 4? Yeah. Talking about the unmodified opinion, unqualified opinion. So what we're going to look at and the real takeaway from this section, and this is heavy on the exam, but it's pretty straightforward once you kind of get used to the pattern here. Okay, and so we're going to take some time to see how to flashcard the pattern and understand what's going on here. But what we're going to see is what is the structure of the report when the auditor does their audit work for a public, non-public, or a non-public company, and they don't have, excuse me, they don't have qualifications. They're not going to qualify, they're not going to adverse, they're not going to qualify, they're not going to disclaim. They're that top part of the grapefruit, everything is good. What will that opinion look like? Now, sometimes this is also called the standard report, okay? Now, we'll first talk about non-issuers, and when we do, we talk about it being an unmodified opinion. Okay? And again, for issuers, we're going to call it unqualified. Okay, now you come over and you start to take a look at what this report will look like, and they give us, you know, some sort of high level way that the report is going to look. I'm going to take a little different approach as to how I want you to get this information in flashcard. So what I'm going to do, because that's kind of a lot there, a lot of words there, and I think it's better if we actually look at the report here, okay? And what I'm going to ask you to do is I'm going to ask you to memorize key elements of this report. I mean, word for word. When you were, you know, in junior high or whatever, they made you memorize, you know, when I was in junior high, they made us memorize the Constitution, the beginning of the Constitution. You had to do it word for word. We, the people, all that. Well, I'm going to ask you to take that approach here for the unmodified, unqualified opinion. Okay, we call it unmodified when it's a non-public company. Okay, independent auditor. You have the report, and then you basically give this first paragraph. Okay, it starts with the opinion. The first thing they do is they're going to give you the opinion, but I want you to label this first paragraph as an intro. Okay, what it really does is it just talks about the financial statements and it says, hey, we have audited these financial statements. Okay, then comes what I'm considering the true opinion paragraph, where you articulate that unmodified opinion. And I want you to flashcard that whole paragraph. Now, maybe in the Becker flashcards that you have acquired with your package here, they've gone ahead and done that for you already. That's okay. If not, write it out. Okay. In our opinion, the financial statements, and they list out the financial statements, were prepared in accordance with generally accepted accounting principles in the United States of America. That's the opinion. Readers look at that, they say, okay, I can rely on these financial statements, right? Then you start to give the basis for your opinion. What work did you do that's going to allow you to give this unmodified opinion, okay? We don't call it this officially, guys, but this is like a scope paragraph. This is telling you what you did. And it includes what? Saying that we follow general accepted auditing standards. Okay. Now notice in here, it says that what? We are required to be independent. Okay. And we believe that the audit evidence, right? Because we're always evaluating evidence, is sufficient to report the basis for our opinion. So you've seen our opinion. Here's what we did. Okay, not in a lot of detail, but it's at a high level, right? Responsibility of management paragraph comes next, and I have no other way of describing that other than what it is. But management is responsible for preparing the financial statements and maintaining a system of internal control. I want you to flashcard that paragraph. Okay, so far, I've asked you to flashcard and memorize every one of these paragraphs. Okay, also the basis for opinion, I didn't put FC there, but I want you to memorize that. Okay, And then our responsibility as the auditor, I want you to memorize that. So we talked about the basis being the work we do under GAS, but this is where we really start giving some more information that we're providing reasonable assurance, which is a high level. It is not absolute, okay, and so on, okay. Now, then it comes over and we really start getting into a lot of detail here. Here, I don't want you to flashcard entire paragraph. I simply want you to flashcard the things that I'm going to highlight for you here, okay? So in performing an audit, in accordance with GAS, we exercise professional judgment. We don't give our judgment away to anyone else. We identify and assess the risk of material misstatement. The auditor does that. We obtain an understanding of the internal control, but we are not expressing an opinion on the control. We do that with public companies. This is the non-public company report, so we will, but we're aware that people may be aware that there's reports out there that give opinion on internal control. We don't do that here for a non-public company, okay? And then conclude whether our judgments whether in our judgment, conditions or events are considered in aggregate that raise substantial doubt about an entity's ability to continue as a going concern. That's our responsibility. We're not doing that here, because if we were, we'd have another paragraph that would talk about that. We're saying that's part of our responsibility, though, okay? We communicate to those charged with governance. If there are internal control matters, we did communicate those, okay? Our opinion does not extend to other information apart from the financial statements. So often when a company issues their financial statements, they may have other information there. Maybe they're including it in an annual report or something. The auditor's opinion does not extend to that annual report. Okay, and we're letting them know in our report. In connection with our audit of the financial statements, we have a responsibility to read that other information and make sure that it is not materially inconsistent with the financial statements. So we're not giving an opinion on it, but we don't ignore it either. We read it and see that it is not materially different from what we're seeing in the financial statements. And then where applicable, okay, if necessary, we would talk about regulatory matters. This is not always the case. So just flashcard that you include that where applicable. And we'll talk more later in some other classes about when you have to provide this. Okay, so that's a lot to flashcard and memorize, but I do need you to do that, and here's why. On the CPA exam, what they'll do is they'll give you, say, a task-based simulation. You're definitely going to be task-based simulation. It might be one like this, and you maybe see one in your homework for this module. They'll say, your staff has drafted the audit report. Go through this example, the audit report, and indicate areas that are incorrect. Well, if you have the thing memorized, that's a piece of cake. If you don't have it memorized, this becomes an odyssey for you. This becomes the task-based simulation that takes you way over the amount of time that you're supposed to be spending, which is about 15 minutes per task. And I'll talk more about timing too as we move along. Okay, but you would spend way too much time and you probably wouldn't get the points that should be readily available to you here by memorizing it. So I'm not kidding, guys. I really, really need you to memorize those paragraphs and then the elements that I highlighted on this page. Question?
So, I do. So when it's only the parts that you highlighted and then you circled and the ones where you circled the whole thing, you want those memorized pretty much word for word? Yes, like
Yeah,
that.
correct. On this page, it's word for word, even if I didn't highlight it, if I put a flashcard next to the paragraph.
Okay. Can I see the second page just real quick? I think I missed the last bit of that.
Yeah, then the second page, it's just, you can kind of bullet it the way they have here on the things I highlight. You don't have to memorize every single word.
Okay, and then that last part says when applicable.
When applicable, yeah, because there's not always legal or regulatory requirements. So I just want you to flashcard, really, it's where applicable, because I don't want you thinking you always have to have that. It's where there are legal or regulatory requirements that affect the auditor's report.
Okay, great, thank you.
Yeah, yep. Okay, and then come over to the next page and we talk about key audit matters. Okay, now I find this a little annoying. Okay, what they tell us here, actually, it's I'm jumping a little bit. It's annoying when we get to the public companies. For non-public companies, it's not that annoying. Okay, but what they tell us is such matters are selected from matters communicated to those charged with governance, and non-issuers have the option whether to engage the auditor to communicate key audit matters, but should consider the needs of the user of the financial statements in making this determination. That's not what I wanted. Oh, well, I highlighted it. I don't have to unhighlight it, because what I want you to flashcard is here. When deciding which matters, if any, should be communicated as a key audit matter, the auditor should consider the following items. Make that a flashcard. And what does the word if any, the phrase if any, tell you?
That sometimes there won't be any matters.
Correct. Key matters and whether they affect the auditor's report are in the judgment of the auditor to include. Make sense? Okay. So you may want to point out areas where you had high risk and material misstatement, areas requiring significant auditor judgment, significant events or transactions, and it is ultimately a matter of what? Professional judgment as to whether you're going to include that. So you don't have to. Okay. Coming down, and I find this worth flashcarding. Auditors are prohibited from communicating key matters when you've given an adverse or a disclaimer of opinion, unless you're required to by regulation or law, which is probably highly unlikely. Okay. And the reason they're saying that for adverse disclaimer is they don't want these key matters that are sort of optional to start to overshadow the real problem, which is we have an adverse or disclaimer, right? And so they just say you're prohibited from providing those if you have a disclaimer adverse. Okay. Okay, good. And then you need to document things about the key audit matters if you included them, obviously. Okay, description of the matter, etc. Okay. All right, good. So that covers the unqualified for non-issuers. Okay. Now, unmodified, excuse me, for non-issuers. I wish they would agree as to the term, because it always, mainly to help me, you know, because it's always like, you keep slipping back and forth on those, and if they just used unmodified or unqualified, everybody would be easier to talk about. Okay, good. So let's take a look now at the unqualified, now they call it, and now we're dealing with issuers. Okay, and we're going to take a similar approach, which is to memorize key aspects of the report. And I think their report is easier to memorize, so that's good. Okay, for the issuers. So you come over and we have the opinion paragraph. So in both cases, both for issuers and non-issuers, we start out with the opinion. Then we give the basis for our opinion, and I want you to memorize this paragraph. Okay. But notice, guys, we're not talking about standards generally accepted in the United States. Now we say what? PCAOB, although we do call out this country of origin for the PCAOB. And, you know, what was interesting, did I say that Sarbanes, did I mention that Sarbanes created the PCAOB? 2002 Sarbanes-Oxley Act, it literally says there will be this entity called the PCAOB, and they would set us accounting standards. The other thing that the federal legislation did, Sarbanes-Oxley Act did, is it made clear to everyone that the Security Exchange Commission is the entity that has the legal authority to set the accounting standards, and they will do that through the vehicle of the PCAOB. Up until that time, the AICPA used to try to argue that there was no federal legislation that allowed the federal government to dictate auditing standards. And they used to try to argue that, and they went a little too far. And then with Enron and WorldCom, everybody's looked and said, well, now, you've been bugging us all this time by trying to argue that the ICPA has the authority to set auditing standards and not the federal government. Now, because of Enron and all that and Sarbanes-Oxley, now we're going to tell you SEC has the authority to set the accounting standards. So it even goes into the report that the SEC is to do that, okay? And then you have the basis for the opinion. I want you to memorize that. Now, critical matters, okay? And this is where I get annoyed, okay? This critical matters is required. They tell you, you either have to call out a critical matter, or you got to say that there isn't a critical matter, but we really expect you to have a critical matter. Well, that's almost like taking away auditor judgment from the auditor. Now I've got to modify my report, even if I don't think there's anything that is that significant that it should alter my report, yet I have to come in and I have to give this critical matters. The important thing, and I don't want you don't have to memorize this paragraph, but I want you to put that it's required, and I want you to put that it does not equal a qualified opinion. The opinion is still unqualified, okay? But we have to provide a critical matters. I was looking, so they put that phrase there, it doesn't alter. I mean, it alters in that you have to put the paragraph in there, but it doesn't alter it. It's still an unmodified opinion, okay? Unqualified opinion. Now, if you look through companies' reports, like in one of my classes, I go through and I kind of show the audit report for Apple. There's a critical matter in there about uncertain tax position, I guess, that the auditors, I think EY, have felt that they've taken with, and so they called that out as a critical matter. But it's a little annoying because it just feels like they kind of force you to come up with a critical matter, and I don't like when standards do that. Okay, so you come over, the auditor's report must include any critical matters arising, or state that they couldn't find one, but it's expected that in most audits you will have one. That's almost like telling your kid, well, you don't have to do this, but if you don't, I'm going to think about that when I give you your allowance or something like that. So anyway, okay, now you come over and identification of the critical matter. Okay. Does yours have the bubbles? The file you're
Mine
looking
A square,
no bubbles?
no bubbles.
No bubbles.
No bubbles. That means I'm in the wrong file. It hasn't changed anything we've looked at, guys, but I want to be on the right file. It doesn't change anything we've looked at, other than you may have been sort of where is that? Everything we looked at is consistent with what was on the screen, but or what's in the PDF, I should say. But I want us to be in the same file. Okay, so I think it's down here. For each cam identified, where is that? What page are you seeing that on?
29, Professor. Yeah,
29. Okay, great. Thank you. Okay, so right here. Is that 29? Yeah. Okay, good. Right here, I want you to flashcard this, guys. Okay. For each cam identified, what is the identity? And this is what needs to be in the audit report when you have, because you pretty much going to have the cam. Description of the principal considerations, description of how the cam was addressed, and reference to the relevant financial statement disclosure. And I think the mnemonic they used to have here was iPad, and then they took it out because I think probably somebody thought, oh, here it is. Identify it on a pad of paper. Oh, I see. But they didn't want to say iPad because I guess maybe somebody said, hey, you're kind of maybe getting up against some copyright issue. Okay. So you could use that mnemonic or just flashcard the elements that need to go in the audit report. And then coming down, I want you to flashcard what needs to be documented with the CAM. Okay. And you're going to see, guys, that often I'm going to ask you to flashcard documentation requirements. And the reason being that, hey, if it's a documentation requirement, that's an easy question for the CPA question writers to write what has to be documented, right? And they're lazy and they got to come up with a question. So that's an easy one for them to throw out there at you. Further, what needs to be documented often is a summary of what was done in the area. So I think it's worthwhile to make flashcards of documentation requirements. Okay. Okay, good. What time is it? 7:23. And do I think we can? Reasonably get through this next module? I tell you what, I'm going to stop because I know that some of you don't have access to the software yet. And I think 4 modules of stuff is pretty good. So I'm going to stop. Okay, we're a little early. Typically, we'll go up closer to 8 o'clock, but I'm going to go ahead and stop. I could probably push it and finish this module 5, but I think this is kind of a nice breaking point in that we've done what? We've talked about the report, and we've talked about the standard unmodified, unqualified report, right? What we'll get into when we come back next time on next week is we'll start talking about, well, what happens if you have an accounting issue and you have to qualify, or if it's pervasive, you have to adverse. What happens if you have to qualify or disclaim because of gas issues? And then we'll get into some of the other nuances with the reports, with the explanatory paragraphs and whatnot. Okay. Okay, guys, don't think you're going to get out early every time, but I think today it's okay.
Professor,
Thank you.
Uh-huh.
when I'm making the flashcard for the memorizing the reports, should I break that down? Would you recommend breaking down each section or just having it on one page and reading through it?
Flashcard per paragraph. That's why I put FC several times on there.
Okay. Sounds
Yeah.
good.
I think that's a better way to digest it. It's hard at first because it is an old school approach to things. I understand that. But I'm also going by what I did to prepare for the CPA exam And there are some things that stay in your head forever is like, oh, thank God I did this, right? You know, and that was one of them. That I I took Becker and they said you should memorize it. I paid $1,100 for Becker. Was it 13? It might have been 1,200, something like that. And that was $1987. And people started mocking me, my family, my friends. What a fool. What's wrong with you? So I was, whatever Becker told me to do, I was going to do, because I'm like, okay, I'm not going to be laughed at by people. I refuse to be them to tell me, told you so. I'm going to do this and I'm going to pass. And so that's the mindset I went in with, was I got to do this now, because my ass is on the line with everybody. Now they're going to call me out to be a fool if I don't pass. And so I did everything they said. And so that was one of the things that just was like, yeah, Newt Becker is my man for making me do this and getting me to pass the exam and not get kicked out of the house by my parents. So anyway, that's my story. Okay.
Great, thank you.
Okay, guys.
Good night, thank you.
Good night. Have a good night.
Thank you, Professor.
Bye-bye.
Thank you, Professor.
Good night.
Thank you, Professor.
Good night. Where were you?
Professor, I'm here.
Huh?
Professor,
I called you out and you weren't
I
there.